States in Nigeria require huge capital to meet the requirements of expenditure in areas of infrastructure to unlock their economies and create prosperity. The Nigerian capital market provides the opportunity for states to raise long-term capital to finance their critical economic projects. Understanding these dynamics, the governor of Ekiti State, Dr. John Kayode Fayemi, CON, visited the Nigeria Stock Exchange to engage the market players on why his state remains an investment destination of choice. At the presentation of the facts behind the state economy, the CEO of the Nigeria Stock Exchange, Mr. Oscar Onyema, commended Governor Fayemi for his reform-minded approach to governance and commitment to grassroots development.
We acknowledge Your Excellency's progressive and reform-minded leadership of Ekiti State, evidenced in your commitment to grassroots development to positively impact the lives of citizens of the state.
Mr. Onyema informed the market that the exchange supported Governor Fayemi's previous term between 2010 to 2014 through the issuance and listing of the 20 billion fixed-rate infrastructure, which helped to expand Ekiti State's economy.
During your previous term in office between 2010 and 2014, the exchange supported the issuance and listing of the 20 billion naira fixed-rate infrastructure development bond, which financed a number of projects, the Ikogosi Warm Springs redevelopment, the Ekiti Waterworks construction, as well as the refinancing of interest borrowings by the state. In that time frame, the Ekiti expanded by 63% in nominal terms to become a trillion naira economy, according to data from the National Bureau of Statistics. The state also recorded a 15% improvement in terms of the enabling business environment assessment by the World Bank. Today, and I should say, by the way, that that money that was the 20 billion naira has been fully repaid.
Governor Fayemi in his presentation highlighted the fact that his administration was committed to delivering sustainable economic growth and making Ekiti highly competitive in Nigeria.
On April 3rd, 2012, during my own first term as governor, I had the honor of ringing the closing bell at this exchange, signifying the successful completion of a 20 billion bond issuance, part of a 25 billion multi-note issuance program. As with our first foray into the debt market, the capital raised was used for infrastructure projects, such as the State Pavilion, the Civic Center, the Government House, resuscitation of Ire Clay Factory, the redevelopment of Ikogosi Warm Spring Resorts, waterworks rehabilitation, road construction, and modernization of various markets. I'm pleased to report that both bonds have been fully redeemed, while the good people of Ekiti State continue to benefit from the projects, which supported economic growth, put our people in jobs, and increased access to public utilities. In our opinion, both programs demonstrated how governments can use markets to spur development. And like I said 7 years ago, I am not only here to ring the closing bell, but also to express the gratitude of the government and people of Ekiti State to the Stock Exchange for believing and supporting our development story. Today, Ekiti State under the current government is focused on reclaiming our land and restoring our values. And what does this mean in financial terms? It simply means making Ekiti an attractive destination for investors, delivering sustainable economic growth, putting people to work, and lifting our citizens out of poverty. And to ensure this happens, we have renewed our focus on peace and security, which is the foundation of any economic development, and started investing in developing the infrastructure required to make Ekiti State a competitive destination for business. We've also passed the law establishing the Ekiti State Development and Investment Promotion Agency. Once the agency commences full operations, It will drive our ease of doing business reforms and provide investors with a one-stop shop to deal with investment-related matters. Our focus on agriculture, especially on a special agric processing zone, will not only improve the productivity of our farmers, but also provide the infrastructure required for processing activities. And that's already started. Already the market is responding to our approach, and we expect to close very soon a partnership on the currently unutilized Ekun dairy farm with one of Nigeria's leading dairy companies. Our belief is that Ekiti is ready for more of such investments, and we're available to answer questions on investment opportunities that exist. Our tourism assets also provide significant investment opportunities. At the appropriate time, we will seek investors for some of our existing assets, as well as several greenfield opportunities. This will be complemented by a clear strategy on attracting business, recreational, and medical wellness tourists to Ekiti State. Of course, we're not ignoring our role as a government and in providing the climate for many of what we are asking you to support to thrive. And that is why we've returned to basics, as we did in our first term, by ensuring in free medical health, free education program right up to senior secondary school, and also providing for our people support for many of the small and medium scale enterprises. So it is our belief that the stock exchange is now more strategically positioned to support Ekiti State in unlocking investment in our focus sectors and also optimizing state-owned enterprises. And in asking you to do this, I should add that since my return as governor as well, development partners have returned to Ekiti State. The World Bank is playing very heavily in Ekiti. The African Development Bank is also heavily involved with us in Ekiti. The Gates Foundation is active in our state, as well as many others. But I must not finish these remarks, CEO and members of council and distinguished ladies and gentlemen, without speaking a little bit about the other hat I wear. As many may be aware, I am the chairman of the Nigerian Governors Forum, and this is also something that I believe we need to send to the market. Clearly, Nigerian governors are not oblivious of the fact that governments alone cannot fund investment. We know that investment can only thrive in a climate of partnership with the private sector, with the civil society, and government, all working together to ensure that we make a difference in the lives of our people. We cannot continue to parade unattractive figures of 89 million Nigerians living below the poverty line. We have to do something drastic about it. Yes, we have the ERGP as a strategy for getting out of recession. We now need a strategy for growing the economy and investing in our people. Thank you very much.
Governor Fayemi speaks further on why Ekiti should excite the interest of the market for long-term investments.
Well, investment should expect that when we eventually come, we would come with a very focused agenda on regenerative initiatives. We are not going to borrow on consumer spending. We're not going to borrow to pay salaries. We're going to borrow to focus on issues that are of critical importance to Ekiti State people. Agricultural processing zone, our knowledge park, our support for SMEs, and essentially our support for social investment and infrastructural development. So that's what we will be doing. But stay tuned. We would unveil that program in the not too distant future.
As chairman of the Nigeria Governors Forum, Dr. John Kayode Fayemi, CON, has led in an exemplary manner by utilizing the capital market effectively and redeeming the bonds issued in his first term 2010 to 2014. It is expected that states will explore how to tap into the market to finance expansion and growth of the larger Nigerian economy.